Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me is Shel Bhatnagar, and this is the closing edition of the markets today on markets. When we talk about the kind of closing action we are seeing on the D Street, we're hovering around 23,172 mark. That's an 86 point of an uptick that you can see right now. We've been hovering in a narrow band of range, but it's definitely much better than yesterday's sharp losses that we've been witnessing across the board. The Nifty Bank is doing much better than the Nifty right now. 1.5% higher, that's almost a 730 point of an uptick at 48,771. Almost all the sectors barring IT and FMCG, they're all hovering higher, with the metals taking the top spot about 3.8% up. PSU banks are also rallying pretty sharply right now, 3.5% higher. Most of the PSU banks are hovering near the day's high. You also have the broader markets like mid and small caps that are now inching about 1.5 to 2.5% higher in trade. Autos are also driving in a faster lane. Adani Group stocks are continuing to maintain their top spot. All the group stocks are up and about, with Adani Power leading with over 18% gains. Adani Enterprises and Adani Ports are the top two movers on the Nifty moving factors as well. Following this, we have some metal stocks and power related stocks also that are creating some buzz. So that's as far as the action on the D Street is concerned. We'll come back to it, and we will be speaking to top market experts to really help you understand how to navigate through this market. But there's also a lot of action that's taking place in the primary markets as well. With respect to the IPO space, our focus also is on Laxmi Dental IPO. It's entered the day 2 of investments, and what you already see is that the IPO has been subscribed over 11 times so far, with strong response being seen on the retail aspect as well. The IPO has been launched with a price band of 407 to 428 rupees per share. It's a 698 crore rupees IPO with 138 crore rupees of fresh issue, and the rest of it is offer for sale as well. Now, to discuss with us what is it that the company's aim and objective is of launching the IPO, and what can we expect from the company in its growth aspects going forward, we have with us the top management of Laxmi Dental joining in. Mr. Rakesh Kakkar, he's the chairman and the whole-time director of Laxmi Dental, who's joining in. We also have with us Mr. Sameer Merchant. He's the MD and the CEO of Laxmi Dental. Warm welcome to both of you. Thank you so much for joining in, and here's wishing both of you a very happy Makar Sankranti as well. I'll start off with you, Mr. Kakkar, to really help all our viewers understand what is the aim and the objective with which you have launched this IPO. We are already seeing a strong response. Day 2, it was fully subscribed on day 1 as well. Day 2, there are oversubscriptions flowing in. So we do know that there is a lot of demand and interest among retail investors as well to look at your IPO. But for the company specifically, you're going to be raising about 138 crore rupees as a fresh issue. What are you going to be using that for?
Yeah, first of all, happy Makar Sankranti, Sakshi, you and your viewer as well. And thank you very much for the kind words. So, of course, the money what we are raising, it's going to use for latest technology and the machinery and the automation. So that what we are going to use this primary money for the business.
Just to add, Sakshi, if I have to bifurcate that, half of the proceeds is almost going towards capex. We are going to enhance our automation capabilities, digitization capabilities, add more plant and machinery so that we can grow our capacity. And some portion is debt repayment, and the other is GCP.
Okay, got that. So that's the view that is coming in right there. Okay, then tell us, I'll also ask you to expound that a little bit as well to help us understand, Mr. Merchant, as far as the kind of, I think you're going to be one of the only company that's has a presence in the dental space getting listed. So you're going to be the first one that investors will have exposure to. Tell us a little bit about your own business and, what is the kind of moat that you come up with?
So, yeah, you rightly said we are the first one to come up with this. In fact, we describe our business where we have product range. So we are a integrated dental products company. So our product range starts from pediatrics. So we can do it. We have products for the kids. Then we have products for teenage to young adults for teeth alignment, which is the aligners. Then we have caps and crowns. And then we have senior citizen dentures as well. So we say we are in the business life cycle of teeth. If there are teeth, then we are in business.
Okay, got that. So that's the view that's coming in on the entire company's view right there. Mr. Khakkar, explain to us about the verticals that you have in the RHP. You mentioned that there are three key verticals that you operate in. Do help us understand what each of the verticals is all about, and also individually, what is their contribution to the overall top line that they have, sir?
Yeah, for this, I think Samir is the best person to explain these three verticals and the top line and the RHP. Samir, can you explain?
Sure, absolutely. So the three verticals that we have, like I mentioned, one is a pediatric vertical, the other is the dental aligner solutions vertical, and the third is the crown and bridge and dentures vertical. These are the three verticals that we have. In terms of split, so the H1 split that we have is 73 crores is the crown and bridge, then the 33 crores is about aligner solution, and 16 crores is pediatric.
Okay. And if you could also help me understand what each of them as a margin profile also have. How are the margins also, looking like when we talk about all of them individually?
So generally we look at blended because our customer is still the dentist, correct? Is the same person. So we are selling the same caps and crowns to the same dentist, aligner to the same dentist, pediatric to this similar group of dentists. So we generally see blended. So at blended, we are at about 24% this H1. But if I have to, split, then it's about 15 to 16% in dental lab, about 26% in aligners, and about 55% in pediatric. That's how the split is currently.
Okay, got that. And could you help us understand a little bit of levers? Where will it come from for your existing margins? And when you want to grow it further, how will you be able to scale them? Any key levers that you can point out, which we can also keep in mind when we are speaking to you in the quarterly results?
Sure. So currently we are working with 22,000 dentists across India and outside of India. In fact, 35% of our business is exports, 65% is India. One of our key or few of our key levers are one, we are doing a lot of internal penetration. So that means if we have 22,000 dentists, we can cross sell and upsell a lot of internal dentists that we have. And at the same time, we will be a part of a lot of marketing activities, doing exhibition events to grow our network of dentists. We will automate a lot. So currently we are at about 62% digitization. So that is what the focus is. Dentists still take a lot of physical impressions with that, rubber-like material. We are doing a lot of digital stuff where you can just take a scanner and take a scan. So that we are at 62%, and also do our branded restorations in aligners and crowns and bridge as well.
And when we are
Okay.
saying exports, so we are exporting to UK, USA. So made in India teeth. So that teeth is going to put in UK, USA's patient mouth through dentist. So we are exporting aligner, crown and bridge, kidsy products,
Pediatric,
and material as well.
correct,
So, explain to us your geographical mix then. Domestically, you said 65% of your overall revenue
correct,
comes, and
correct.
the rest of it is split between UK and US?
US, UK, and other parts of the world as well. Some in Europe as well.
Okay, got that. And you would be comfortable with this ratio, or do you see this, also one over the other expanding a little bit more?
Again, the dynamics are pretty strong across the world. Especially in India, the tailwind is there. There's a lot of awareness which is growing for dental, and things are moving very, very strongly in India. So we will keep evaluating. Too early to say right now, but we will keep evaluating, and wherever the best ROI is based on what country we enter, or the existing country or a new country. As a board, we'll take the right decision for Laxmi Dental.
Mm. You did talk about, Mr. Burchan, that you have about 22,000 dentists that you're working with overall.
Yeah.
Tell us, what is the mode that you present to them? Why? And you must have got a lot of competition from the unorganized market as well. So, how do you deal with that when you speak to dentists? Because your primary business is also with them as key clients. And what are you doing to increase your clients in that fashion then?
So apart from being a organized player, we have all the certification that is needed. in terms of branding we are doing, so that when you get a product, it's a safe product. We are ISO certified. We are using materials which are CE FDA certified. We do a lot of educational programs as a company where we educate the dentists. We will bring the best key opinion leaders from India or across the world and help them, learn the newer or nuances of dentistry. So we and do a lot of things for them to understand that as a company, first, the product that we offer is a world-class product, since 35% of our business is export. So they're not just getting a product which is made for India. This product is made for the world. Two, we are doing a lot of initiatives on the digitization effort. Like India today is at a single digit penetration in terms of intraoral scanner, but we are already at 62%. Then in terms of branding aspect, where we bring them quality with a brand which assures safety to them and to the patient. And then the education driven product as well, so that they know what they are buying.
Also, can you tell us what about the pricing of your key products like aligners, for instance? How does it differ with what is existing in the unorganized market in India?
So in terms of pricing, it's complex because it differs patient to patient. You have to go to a dentist. They have to evaluate what kind of aligners you need, whether different materials are needed, different time will be needed, different number of sets are needed. So it varies a lot from patient to patient. So it's hard to define the price point because it could be one for one patient and it could be completely different for another patient.
Okay. Do tell us what is the vision going forward for yourself. I think on an annualized basis, you have about 200 crores as your top line. Where do
That's
you
correct.
see
Last year.
that going forward? Yeah, as per the last year, where do you see that going forward? What is the kind of growth that you could expect over the next 1 to 2 years perspective?
See, if I would like to talk about growth, maybe we see historical for us. If the industry in India is growing, say at about 10-12%, we are growing at 20%. So that's how we are growing and what we have done. And this was pre-proceed. So this was internal accruals, which was helping us grow to this regard. And now with the primary and the infusion towards our growth in terms of building capacity, we are sure that we will do better in the coming years.
Okay, got that. So that's the view that's coming in also. Mr. Khakkar, would you also like to share with us as closing comments as to what would you want your aspiring shareholders, investors to really take it as a message from this interaction when they actually look at your company as a prospective company for their investment portfolios?
So simple message I normally always says in companies meeting, it's like 140 करोड़ की आबादी 32 लाख.
That's the potential.
Wonderful. Well, thank you so much to both of you for sharing all those thoughts and ideas with all our viewers. All the best for this IPO and for the upcoming listing as well. For sure, we will catch you around the quarterly earnings now to help us understand where the company is growing forward from here. Thank you so much and all the best.
Sure. Thank you so much.
Thank you
Thanks a
very
lot.
much.
Thanks for
Thank you.
having us.
Bye-bye.
Thank you.
Okay.
Bye.
All right, viewers, so that's as far as the primary market action is concerned and the new IPOs that are hitting the streets. You heard from the management the expectation there. Let's get back to the markets now. We do have Shell Patnagar also joining in on the show with us. So we'll get back to him and the chat. Shell seems like yesterday's sharp losses are seeing some kind of a relief rally conversion now in the markets, especially PSUs, PSU banks, Adani Group stocks. Those are the pockets that are actually doing very well at this point in time. So some relief is coming in, but again, the big question is, will this be sustainable or not? Because those are the kind of questions that most of the investors also have. Okay, we'll try and get back to our top guests also in the meanwhile, but let's look at how the markets are shaping up. Metals clearly shining bright, almost 4% of an uptick that can be seen right now, 3.9% higher. You have Steel Authority, NMDC, Hindalco, upwards of 5% each. That's the kind of move that we are seeing, almost 3 to 5% higher for all of these stocks within the metals pack. PSU banks, look at the kind of rally that's being seen in the second rung of PSU banks like an Indian Overseas Bank, Central Bank of India, Bank of Maharashtra, UCO Bank, Indian Canara Bank, all of these stocks that are actually doing very well in trade, almost 6 to 7.5, 8% higher, and they're hovering near the day's high level. When we look at the Nifty Next 50 list, again, there's an interesting move. Of course, Adani Group stocks, like I mentioned, these are the pockets that are actually doing very well. Adani Power, 17.5% higher, still holding up very strong. Adani Green Energy and Adani Energy Solutions, Total Gas, these are the stocks that are actually hovering much higher as well. Along with this, the entire power space is also doing well. Let's look at the mid caps also to see how things are shaping up there. Mid caps, you have even the defense names that are doing well. Look at a Mazagon Dock shipyard. That's the kind of move that you're seeing on Mazagon, is over 10% kind of a surge coming in on this one as well. Cochin shipyard is also at a 5% circuit. So those are the kind of moves that you're even seeing on the defense names right now. That's the kind of move that you can expect on the mid caps. Then you also have Biocon, that's actually surging pretty sharply within the broader markets. You have Biocon up at 6%. So interesting names being seen across the board. Okay, we do have our guest with us, Mr. G. Chokalingam, the founder and MD of Economics Research, is joining in on the show with us. Warm welcome to you, Mr. G. Chokalingam. Good to have you with us on the show. Tell us, how are you really looking at the market? Today there is some bounce back from last 2 days of heavy selling that we've seen in the markets. Do you see this sustaining, and any key factors that would be important to look at this bounce back sustaining, sir? Could you please unmute yourself, Mr. Chokalingam? We can't hear you.
Sorry. Good afternoon. I doubt whether this bounce can be sustained in this month. The main reason is that all of us know the FIs have been selling, rupee is weakening. But added to the pain in the last 4 months are two major factors. One, sudden bounce in the oil prices. Till recently, oil was down 20% from a 52-week high. Now it has gone up 16% from the bottom. And second, some of these global institutions like United Nations and IMF, they were projected even FY26, the growth slowdown may be there. So these are something new. I believe these are the reason for even yesterday's crash. Now, overall 62 lakh crore minimum has been wiped out from the September peak. So that itself will be a dragger. And secondly, today marginally down oil price, but unless oil price shows significant weakness, I doubt whether the bounce can be sustained. And second, I do not see FIs rushing back to the market till the budget is presented. So in my learning in the past, whenever market was weak, rupee was weak, and the budget is forthcoming, the FIs tend to sit on the sideline and wait for fine print of the budget before they make any major decision to invest back. So therefore, I would be happy because we are also affected by the meltdown. But I would be happy if recovery is sustained. But I have little doubt that it may not sustain. We may have a little more pain till Jan, possibly even till mid-March. But I would continue to say that one can use this opportunity from Jan to March mid to accumulate a quality stocks, because 3 decades we have seen, ups and downs are common in the small cap, mid cap. But certainly those who always use, these kind of opportunities to accumulate a quality stocks in terms of the valuation comfort, balance sheet comfort, management quality, definitely they can end up with good wealth. But one has to spread till mid-March.
Okay, Mr. Chokalingam, another thing that I wanted to ask you is on the Adani Group stocks. I remember speaking to you about this, I think at the beginning of the new year as well. And I think you did say that a large part of the worst is probably behind this space as well. Today we have seen this sharp surge coming in on the Adani Group stocks. What have you assessed as the key reasons behind this bounce back? And Do you see this continuing?
No, I am not aware of the developments today which led to this, and I have been optimistic on Adani Port because that is the only stock I have been tracking, and I have been optimistic on Adani Port for medium to long term because I am extremely bullish on India's growth story sustaining around 7%, which would mean even if goods exports do not grow, perennially the goods imports would continue to grow, and that would be positive for port business. And unlike other capacity in the various industries, you can't create port capacity so quickly. And in fact, it's very tough to replicate or find a new port. So both are very big positive for port business. That is perennially growing goods import because that is related to our population and therefore our import of certain key commodities like oil and other materials keep growing only. And second, the supply of port you cannot simply just because we have resources you can't expand it or multiply it. So therefore, I maintain medium to long term positive view on Adani Port.
Okay. Mr. Choklingam, what about the kind of rally that we are seeing in the PSU banks? Any key preferences here that you'd like to look at?
Yeah. Uh, the fear was overdone, particularly yesterday in PSU banks. Yes, there are certain concerns on the fundamentals because last year we were growing banking credit in the range of 14 to 16%. Now it is around 12%. It is expected to slow down considerably in FY26. However, also there were fear that the asset NPA might increase. Yes, both are true, but the punishment meted out PSU banking stocks was over them. It was more than what they deserved, especially yesterday. Because we are seeing these PSU banks still sitting on 10-year record level of quality of assets in terms of net NPA, which is the lowest in the last 10 years. Also punishing them by 30, 40, 50% for growth slowdown from 16 to 14 or 13 is over them. So that's the main reason they are participating in the bounce. Among all the PSU banks, my liking is Bank of Maharashtra. I believe it is a fabulous PSU banking stock. I personally do not own it directly or indirectly through any proxies or relatives or friends. But I have extraordinary confidence in Bank of Maharashtra. Its net NPA, the latest net NPA is 0.2%, the lowest in the industry. And if you look at, I use a common sense approach also in equity research. If you look at outstanding net profit of just one quarter, last Q2 quarter, and compare with outstanding net NPA of Bank of Maharashtra, the quarterly profit is itself is more than three times entire outstanding net NPA. So this kind of feature only few selected banks have. That means, if management decides to make a net NPA zero, it's just a matter of one quarter. They can entire outstanding net NPA can then write off. And second, this is located a lot of bank branches are located in Maharashtra state. We all know which is the most developed states, and a lot of activities are happening in terms of promoting the growth and capex. And these are the two. And most important factor in the latest figure is Q3 business numbers officially announced by Bank of Maharashtra. Very interestingly, the credit has grown at 21%, 21.4 or something, if my memory is right, which is among the best so far, the PSU banks which have declared their business numbers for Q3. Amazing. So I think any such opportunity comes, in future again, I would say that this will become a most attractive stock.
Okay. Mr. Chokalingam, do help us also understand, if I have to ask you in the run up to the budget over the next 2 weeks or so, are there any pockets where you believe the maximum trigger can actually come in for investors and traders to really keep focus on? Anything from the infra pack, defense is also on the move again. There are some moves coming back onto the railways. Any pocket that you believe will be up and running?
I'll be the wrong person to talk on stocks related to budget. So I have a very funny view. In my view, the budget is forgotten after 1 week after it is presented. So I am a student of economics. I am not saying that budget is not important. It is definitely the most important event in the Indian economy. So, the individual stocks reacting to, the small measures, they don't sustain. So what one has to see is one has to see the fine print of the budget and see each and every measure pertaining to a particular sector, whether it is there, even if it is there, whether it is a significant proportion. So normally such measures are limited in terms of, direct implication for listed stocks. Yes, they do matter in giving a direction on the growth and therefore a direction for the stock market, fiscal prudence that also market likes. Also, the taxation concession, they matter. And also for stock market individual stock, I would rather wait for the budget before taking call. I would wait for, the any proposed changes in the import duty, anti-dumping duty. Those are the kind of measures which will have a durable impact on the sector and the listed stock. So till that time, I normally, in the last 20 years, public domain, I never, recommend individual stock before budget anticipating any speculative news.
Okay, got that. Mr. Chokalingam, thank you so much for being with us on the show to help us understand your market view and the outlook as well. We hope and wish that you have a great year ahead. Happy Makar Sankranti from the entire team right there. And we will be getting you back soon on air on Business Today. Let's now welcome viewers in the last half an hour of our discussion on the trade right now. Mr. Ambarish Baliga is a market expert and he's now joining in. Mr. Baliga, warm welcome. Good afternoon and happy Makar Sankranti to you as well. I wanted to understand from you, what's the sense that you're getting in the markets? There is this murmur and buzz doing the rounds that are we entering the bear phase in the markets? 4.5 months odd, and the consolidation continues. We keep going lower, and we're now down 10-12 odd percent from the September highs. Broader markets have lost even more. But what's the sense that you have? Are we really heading into a bear phase? Do you think that could be something that we could be staring at?
Thank you for having me, and wish all of you and all your viewers a very happy Makar Sankranti. Coming to the markets, in fact, I've been cautious for a while. Like especially in the last 6 months, when the markets were trending much higher, we saw a high of 26,000 odd, because valuations were getting too expensive. And slowly we had started seeing that the macro numbers were topping out. We had seen the Q1 numbers, which are nothing too great. We thought that was a blip. Then the Q2 earnings again disappointed. Now we are having the Q3 earnings, and the expectations are nothing too great. In fact, we are looking at disappointments as far as the Q3 earnings are concerned. Look at the macro numbers in the last, 2 to 3 months. All of them seems to be looking down. GDP data. You look at the GST data again. It's growing, but the growth has slowed down. Inflation is an issue. Last month and a half, we have seen the rupee depreciating sharply. And as of now, people are talking of about 88, 89 over the next 2 to 3 months. So clearly, we'll see the market still correcting further. We saw a 1,000-point fall in the last 2 weeks. So it's quite natural that after a 1,000-point fall, you'll see some sort of a bounce back. And that's what we're seeing as of now. Bear phase, yes. If you're talking of short to medium term, say the next 3 or 4 months, yes, I think we'll still see lower levels. In fact, I'm looking at levels of about 22,000 or slightly below that. But then does that mean that we need to wait for those levels to start buying? I would say no, because most of these major down days, you get decent buying opportunities. So keep buying like in small quantities. As and when you see the markets falling. But then, get quite aggressive at levels of about 22,000, 22,500 levels. Because if you're looking at the next 2, 3, 4 years sort of a growth in India, I don't think you can really go wrong. So those who had missed the bus earlier, I think will get a window to buy over the next possibly 2, 3, 4 months.
Mr. Balika, are there any pockets of value that you're looking at within the overall markets? Which are the segments that you'll be more comfortable in these dips to add afresh and probably deploy any kind of fresh funds that you're receiving as well, rather than the others?
No, in fact, I mean, I would be quite comfortable with the IT stocks at this point of time. I think that's the only bright spot in even in the earnings season. I would say. The other sectors which I would look at is specialty chemicals, where I think the China plus one should actually play out in the current calendar year. FMCG white goods, I think we had seen the demand dipping in the last, I mean, 2 to 3 quarters. I think we should see some sort of an uptick in demand possibly from April onwards. And the other one is light engineering, where from an export perspective, I think that should do well looking at the way the rupee is.
And how are you looking at the earnings that have come in just thus far? Only about a couple that we've got. What does that indicate within the IT pack, sir, for you?
No, that's what I said. I think IT pack, the numbers overall should be slightly better than what I mean, analysts are expecting. TCS was more or less in line. Like HCL Tech was lower. That's the reason we have seen that correction. But then two or three really will not determine the trend. I mean, going ahead for the IT space, because there are still a number of biggies which will still come out. You have a number of mid cap. IT stocks which would come out with earnings. So I think overall, I mean, if you finally compare, I mean, this is my expectation because the results have not come out. I mean, end of the result season, if you compare IT versus the other sectors, you'll see that IT overall has performed better.
Okay. Mr. Baliga, if I have to also understand from you with respect to the IT pack again, Mr. Donald Trump's assuming office on January 20th, will this sector have anything to watch out for, and any learnings that could come into effect from his first time regime as well?
No, in fact, again, I think the fear is as far as the H-1B visas are concerned, and I suppose there's a decent amount of learnings which most of the IT companies have done during his last term. So I suppose there'll be more of on-site engineers as far as the IT space is concerned, and I really don't think America can afford to restrict so much of H-1B visas that there'll be a shortfall of, skilled manpower. It's not a question of just manpower; it's a question of skilled manpower. So I mean, like I will not be too worried, but yes, market for the time being seems to be a bit worried on this front. So maybe we should know in the next a week or fortnight or so.
Okay. Mr. Balika, the other space that I wanted to discuss with you is the broader markets, particularly the mid and the small caps. How are you positioned here? Do you see still a lot of froth needs to be taken out despite the correction that we've seen here, or do you think it is probably a better time to look at the mid and small caps again, like periodically you did suggest, for fresh funds to be deployed here?
No, I think there one needs to be very stock specific when it comes to mid caps. I mean, overall, if you're talking about mid and small caps, I would say that the valuations are still quite expensive because we have seen them becoming multi baggers in the last 2 to 3 years, whereas the earnings have not really kept pace. So the sort of correction which you could see in some of these high beta mid cap and small cap names, we could see still further correction. Again, I mean, if you're talking of sector-specific defense, railways, I mean, we have seen so many of the stocks becoming 15 bagger, 20 to 20 baggers. We have seen a 30-40% sort of a correction, but I'll not be surprised if we see another 20-25% correction further from here. But like I said, one has to be more stock-specific, and wherever we are seeing value, we would surely be looking to buy. Like I mentioned earlier, that I'm looking at levels of 22,000 for the Nifty, but that does not mean that I'll wait till then holding all my cash to buy when the Nifty touches 22,000 because that's a view. You never know whether that will actually come true or not. So on any major dip days, I think that's the day to start buying afresh. I mean, for example, we were sitting on about 40% of cash, and we have started slowly deploying that. And in this range, I mean, where we are right now at levels of closer to 20,000, I would be, investing about 5% out of that 40% which is there on the cash which is there. And over the next couple of weeks, I mean, as the market falls 200, 250 points, in fact, I'll be like deploying more. And possibly at levels closer to 20,000, I would have been more or less fully deployed, may keep about 5 to 10% cash as contingency.
Okay, got that. So that's as far as how should you be really looking at cash and deploying the rest of it in the markets right now. The PSU space, particularly, Mr. Balika, this was an erstwhile favorite before the general elections. After that, it
Right.
has had its fair share of consolidation play into, and many places where correction has been far and deep, 30, 40%, 50% of the highs as well. What would your strategy be on the PSU, sir? Any pockets that you prefer over the others, and where do you still see a complete avoid strategy to be maintained?
No, like for example, defense and railway, the PSU space, I would still wait for a while longer. I mean, they could be long-term buys, but I think you could get better levels from where we are right now. Some of the pockets where I would possibly start investing at this point of time would be Coal India, where I think the valuations have become decent after the fall which you have seen. BHEL, I mean, the other one where I think the capex. Play should happen over the next 2 to 3 years. And the tail also has corrected decently well. Looking at the way the oil prices are going, ONGC could be another pocket where one should be investing.
Okay. Let's actually look at some of the other spaces. Let's look at, for instance, the underperformers of the past, sir, the FMCG space. How are
Right.
you looking at that? We did see some of the business updates coming in from, say, a Dabur or a Marico. How would you really assess the kind of updates that have come in? Do you see, underperformance now being a part of the past and things improving for this space, or do you see a lot of pain?
No, this is exactly what I said, that FMCG is one pocket where I would look to buy because the last 2 to 3 quarters have been weak. Even the numbers coming now are nothing too great, but I expect, a sort of a pickup starting from the April quarter. Rural, we are seeing still like the growth is decent. There's a slowdown in urban consumption, which is where I think that uptick could happen. So this could be a right time to buy into some of the FMCG names where we have seen a lot of them getting beaten down. So my picks out here would be HUL, Dabur, Imami to a certain extent.
Okay, got that. Let's take the next one with you, sir. And this one I wanted to come onto the pharma space also, the other defensive space. We have seen an outperformance in 2024, 40% of our move on the index level. We've seen all the three segments, be it the frontline pharma players, the hospital stocks, diagnostics have their fair share of select stocks outperforming. Uh, how are you looking at them afresh at the starting of this new year? Do you see there could be a continuation in performance? And how would you advise the retail investors to go about it?
No, pharma again. Normally it is said to be the best place to hide when the markets are going down. But now with Trump coming back, I'll not be surprised if US FDA again tightens the screws on the Indian pharma companies, and there could be more observations and action taken. So at least for the next 2 quarters, 2 to 3 quarters, I would be a bit cautious on the pharma companies which are basically the large ones, export oriented, especially to US. I would be a bit cautious at this point of time. Maybe I'll just wait and watch.
Okay, got that. So that's as far as a wait and watch approach on the pharma pack. Let's discuss the auto space then with you, sir. Again, a lot of volatility has been there in the past. And there are several issues that the entire sector has braved over the last 1 year as well. Are things looking up? Newer launches, EV focus, that's building up. Again, the news flow talks about how Hyundai is going to be showcasing its futuristic mobility solutions. Hyundai Creta Electric at the Bharat Mobility Expo. A lot of newer launches will start in tomorrow onwards. We will start to see media days and then business days. 17 onwards, we have the action in the autos picking up too. How are you placed here, sir? What looks good? Especially December sales for at least some of the four-wheeler majors were outstanding. Record sales coming in also, and after a long haul. But does it actually showcase that things have improved and, probably the issues are a thing of the past here?
No, I think December could be a bit of a blip. I think we could again see like Jan, Feb, March. May not be great numbers as such, But then, just like FMCG and white goods, I see the auto pack possibly showing better numbers April onwards. And I mean, to a certain extent, possibly it could get help from the budget because, again, as far as infra space is concerned, I mean, like I see a further increase in spend as far as I mean, the government is concerned. I'm expecting a 8 to 10% sort of a rise in the budgeted like expenditure as far as roads and infra is concerned. And I think more important would be the execution, and execution should really pick up in the coming year because last year we have seen the execution not really keeping pace. So all this is going to help the auto space overall. So at this point of time, I would say on a correction, one should be looking at buying stocks like Maruti, Tata Motors, and Mahindra.
And what about the auto ancillary pack? Anything interests you there, sir?
Auto ancillary, I mean, I would be looking at some of the smaller ones. In fact, stock like Janna Auto, I think that's a decent buy at these levels. We have seen a very good correction in the last couple of weeks. So at the current levels, I think it's a decent buy.
Okay, got that. So that's as far as the auto ancillary space is going at this point in time. Let's also dive a little deeper into the commodity based space, sir. We've seen the way how precious metals have performed in the recent past. So again, we'll come back to maybe gold financiers, the gems and the jewelry space. How would you really look at those? And of course, when we talk about the overall metals pack as well, what is your approach on both these spaces, sir?
No, I mean, if you're talking of the gems and jewelry space, I think that's getting decently crowded. I mean, if you go back for 10 years,
Yeah.
Titan are the only major national players. Now, a lot of regional players, one city players have become national players in the last 10 years. So that space has got, quite crowded, and the competition is decent out there. So I think the margins may not be as great as what we saw for Titan over the last couple of decades. So overall, I would be a bit cautious at this point of time as far as this space is concerned because you're seeing quite a few of those stocks quoting at about 100, 115p. For example, Kalyan Jewelers, I mean, before the fall, like recent in the recent past, it was quoting at about 115p. So I don't think that sort of, like valuations can be sustained for too long. And we have seen the correction already. But still, even at these levels, I would say it's expensive. Now, talking of the gold prices, I mean, what we have seen looking at the history of gold, that we see a sharp move, sustained like a sharp move for a while. And we have already seen that happening in 2024. And after that, there's a lull. We see some sort of a correction. It doesn't go back to where it started from, but in a gold, a correction of 5 to 8% is very much possible. And that's exactly, I think, what we'll see in calendar 2025. So from a, gold perspective, I would not be too bullish. And as far as the gold finance companies are concerned, I think the best is already priced in. And I suppose we could see some amount of defaults going ahead.
Okay, got that. Also wanted to understand from you, how about the new age tech space? Another one that I have consistently asked you, even in my prior interviews with you. I believe delivery was something that you were watching out for closely. How is that looking right now? Nothing enthusiastic in terms of earnings so far. How is that looking? Zomato, Swiggy as the new entrant. We have now even in the fintech side, MobiKwik as an addition to Paytm. PB Fintech continues to have given good returns in 2024. The entire
Right.
basket. Tell us, how are you approaching this? What looks good, sir?
No, in fact, I'm bullish on this space. I mean, if you're talking of Zomato, again, we have seen a very decent correction in the last few days. So it becomes a buy at this point of time because if you're talking of the next 2 to 3 years, I think the growth still would be multifold. If you're talking of PV FinTech, yes, that's the other buy. In fact, I've been recommending a buy on this since the last, I think, 18 months or so, and it's given a good return. Going ahead, also, I think it will continue giving decent returns.
Okay, that's the new age tech space right there. Anything, sir, from the new IPOs that have launched in the 2024? 2025, sorry. Quadrant Future Tech, for instance, Standard Class, these have been the first few ones, or maybe the ones that are still open for subscription, maybe like Laxmi Dental we were talking about to the management just in this show in the early part, or some of those which are lined up. What looks attractive to you in the IPO space, sir?
In fact, in the last, I think about 15 to 18 months, I mean, my approach to IPOs has been apply for the IPO, and most of it is lottery because, I mean, especially in the SME space, unless you're putting on a huge application, getting allotment is quite difficult. In the main board IPOs, I think the maximum one should be investing is 10 lakhs because beyond that, it doesn't make sense. And at 10 lakhs also, it's a major lottery. So if you are lucky, you get allotment, book profits because most of them give you excellent returns in the first couple of days, and then you really don't know as to what happens because some of them you have seen correcting decently well. So once your book profits, maybe after that again have a relook going ahead. If it makes sense, then buy fresh. Otherwise, forget about it.
Okay, got that. So that's as far as the view on the IPO space is concerned. Okay, particularly, I did ask you about the earnings, but if I have to ask you about pan sectors, where do you see outperformance coming in, sir, in this quarterly earnings? Of course, IT we have discussed, but beyond that, where else would you be looking at for outperformance?
Beyond that, I really don't see much of a outperformance as such. Possibly the specialty chemical space could surprise us. I think that's one space to be looked at from an outperformance perspective. Other than that, I think it would be disappointment across various sectors.
Disappointment across various sectors as well. Any top ask as far as the budget is also concerned, sir, as a market expert, as an investor, what do you think the government could be looking at in this budget that could probably fuel fire right again into the markets the way it was riding high ahead of the previous budget as well?
No, possibly one is, like I said, the spend on infra. I think that's what is going to kickstart the economy. I mean, we have seen, some amount of slowdown, and that slowdown also could be due to the lack of execution last year. So it's not enough just to increase the budget, but we have to ensure that the execution also happens, which I don't think the budget can do. But then I just hope that happens going ahead. The other area where I think the government should apply their mind and do something about is because of inflation. I think the biggest pain point and the ones suffering are the middle class, the salaried people and the middle class. I think something has to be done as far as the taxation is concerned, maybe give some SOPs, increase the slabs so that there is more cash in hand like especially for the middle class and the salaried individuals.
Okay, got that as well. Banks and NBFCs, particularly the private banks and NBFCs, sir, how are you looking at those two spaces? And any key stocks that are on top of your radar for the new year?
I mean, as far as the banks and NBFCs are concerned, especially the ones which have high component of microfinance as well as the retail loans, as well as SME and micro SME loans, I think they would have some amount of pain because the bottom of the pyramid, seeing a decent amount of pain as far as this space is concerned. So we could see, like these stocks possibly underperforming. We have seen that pain even in Q2. I think that's going to increase in Q3. So I would be a bit cautious as far as some of these banks are concerned. But again, in this space, one of the banks which I would suggest, I think Bank of Maharashtra has already been discussed by the earlier guest. I mean, that's also one of my picks. The other pick is Tamil Nadu Mercantile Bank, which again is
Okay.
one of the oldest private sector banks with a history of more than 100 years, mostly in Tamil Nadu because they have about 417 branches there out of the total 567 branches. And Q2, they had shown the highest profit till date, which was up about 11%. Gross NPAs are down at 1.37. Net NPAs are just about 0.46%. And this bank is quoting at below its book value. Again, expected book value for FY25 would be about 540. So I'm expecting the stock to at least move to those levels and become, one time adjusted book value, which is 540.
Okay. Mr. Baliga, we were talking about whether the markets are going to find their mojo back or not. But what we are probably encouraged by is whether the markets continue to be in a consolidative zone or go soar higher, is the fact that even in this downturn or consolidative phase, we've actually seen continued focus and belief of the retail investors and the mutual fund investors. 26,000 crore rupees and beyond. That's coming in on a monthly basis too. Record high, record number of SIP flows coming in despite the markets being in somewhat a weaker spot or a volatility. So that probably gives us a focus that, one can continue to focus on the wealth creating space that has been an outperforming space as well. So the
Right.
AMC stocks, for instance, exchange stocks like a BSE, CDSL, KFin Tech, the way these have moved. Today also there is Motilal Oswal, that's again up about 18.5%. So the entire space continues to buzz stronger. What is your own approach here? Do you believe this is one space which now has, proven itself to be looked at as core portfolio space for investors, even the retail area?
Not right now, because I think the best is already priced in. And
Okay.
typically, when the markets are going up, it is a double positive for them because their business is going up at the same time. Because the markets are going up, they get a better valuation. Now, when the markets start to come down, and what we are seeing now is that we are in a short to medium term sort of a bearish phase. I think it will be a double whammy for these companies because one, the markets will start giving them lower valuation. At the same time, because the markets are coming down, because the volumes will be reducing, their earnings will come down. So, at this point of time, I wouldn't suggest buying into that. In case one is holding, I think it's time to book at least some profits. And
Okay, got
and
that. Yeah.
and let me tell you one more thing that December we saw record numbers as far as retail SIP data is concerned. Don't be surprised if we see lower numbers in January.
Okay, got that. So we'll keep that in note as well. Mr. Baliga, always a pleasure to have you with us and to listen into all the insights that you share with all our viewers. Hope you have a great year ahead, and we will keep seeing you more often now. With that hope, we are nearing to wind up this special talk and our trading session as well. 23,217, we are up by 132 points. No complaints after yesterday's massive fall. So 833 points higher on the Nifty Bank. That's going strong, 1.75% higher. And a lot of pockets that are doing well today. PSU Banks now up 4.5%. That's the kind of move that you are seeing. Then metals, mid and small caps. Almost 2.5%, 2.7% higher for the mid caps. That's soaring high. Auto stocks, oil and gas, financial services, pharma, all of them are buzzing pretty sharply. And the Adani Group stocks that we've discussed also on the show, they continue to rule. Adani Enterprises up 7% on the Nifty, top mover. Adani Ports up 5%. Shriram Finance, Hindalco, NTPC, BEL, these are the top movers. On the laggard side, HCL Tech. After those earnings that have underwhelmed the investors, almost a 8.6% fall coming in, on HCL Tech. HUL, Apollo, Titan, Ultratech Cement are the other big drags. On the F&O pack, you have again the Adani Group stocks, Piramal Enterprises, and Bandhan Bank as among those which are on the winning side. On the lower end, you have CAMS, that's down 9% in the F&O space, HCL Tech, United Spirits, Havels, L&T, Mindtree, LTI Mindtree, Marico, as some of those stocks that are dragging. But the PSU stocks are also doing well, 3.5% higher. PFC up 7.5%, REC up 7%. So the erstwhile favorites are coming back. IRFC, Concor, these are kind of stocks that are also buzzing in trade. Barring FMCG and IT, rest all of the stocks have actually pulled up into the green. Sectors have all pulled up into the green. India VIX is down by 3.2%, some relief there. 15.4 odd levels on that front. Okay, viewers, we'll wrap it up at that. 23,200 on the closing level, so that's some kind of a relief again coming back. 121 points higher in trade. We end the day on a positive note, but let's see whether things improve from here on as we progress in this week as well. With that, we wrap up. Many thanks for tuning in onto this special. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where we are going to be talking about the HCL Tech's Q3 earnings as well as to understand how the outlook is like going forward from here. First up, to abreast all our viewers about what the key numbers have been. Remember, the profit after tax for HCL Tech has grown by 5.5% on a year-on-year basis. This has come in at 4,591 odd crore rupees as well. Revenues have also increased by over 5%. That's 29,890 odd crore rupees. The EBIT margin has stood at 19.5%. That's reflecting a 90 basis points increase Q on Q, but there's a 25 basis point decline on a year-on-year basis right here. The company is also declared the interim dividend, and 18 rupees per share is what the shareholders will be getting this time around as well. So a lot to discuss with the top management about as to how things are shaping up. We are now joined by a very special person. Mr. Shiv Walia joins in. He's the CEO